What's going on, guys, and welcome back to another video. So today I want to discuss 5 stocks within my portfolio that I want to pump a lot more capital into over the next few weeks and months. We have 2 in technology, 2 in consumer discretionary, and even 1 ETF. So for each of these positions, we'll have a look at their current share price, my current holdings, and we'll also look at some of their top shareholders and catalysts going forward and the reasons behind why I'm pumping more money into these 5 positions. So at the moment, we have about €8,060 invested and are up just under 15%, and we finally broke the €1,000 mark in profit, so we're up just under €1,050. At the moment too, there's a lot of individual companies within this 30 stock portfolio that are up 30, 40, 50, even 70, and some within 80% at the moment, so that isn't the sole reason why I'm picking 5 stocks today. In fact, a lot of these positions would be lower down in my overall performance at the moment. So the first stock on today's list is probably no surprise to most people, is Apple, ticker symbol AAPL. We currently are trading at about $123.99. And if you look over on the left here, we can see we're up just under 12% and we have €280 invested at the moment. The dotted line within the graph is our average price at the moment. For me, Apple is definitely one of the main companies in terms of potential going forward, and there's probably about 3 to 4 reasons why I believe so, and we're going to discuss them right now. For me, one of the first things I always do when looking for a company to invest in is check out their top shareholders, and we can see here on the left as well 3 huge financial companies right here in the form of Vanguard Group, which has 7.5% holding within Apple. Then we have BlackRock, which has 6.2%. And in third position is Warren Buffett's Berkshire Hathaway with over 5% holdings. So it's certainly promising to see one of the biggest kind of names in the game are the top shareholders. So as I'm sure you're all aware, over the last few weeks or so, there's been a huge kind of market sell-off and correction, particularly in the tech sector. And we can even see here from this article on Yahoo Finance that this poses a golden opportunity to take advantage. Firstly, if you're new to investing, to get in at a cheaper price, or also to dollar cost average on your current position. Now, it's worth noting that the bull market has kind of taken off again, and this article was from last week. However, in my opinion, there's still a good opportunity to get in at a cheaper price in Apple. Definitely one of the main reasons why Apple is on my list is because of the diversification, product offerings, and the potential going forward in terms of diversification and also innovation. We can even see, for example, here on screen, the possibility of an Apple electric vehicle car, which would have a $3 trillion value to the company, and also the promise of a new iPhone. But it's not just these new innovative products that are enticing me further into Apple, it's the everyday items such as my iMac that I'm using right now, my Apple iPhone right next to me, etc. that are coming more and more into everybody's daily life, and as prices are kind of becoming a small bit more reasonable in terms of iPhones and their computers, that a lot more people are continually using them on a daily basis. As we have 5 companies to get through today, I really just want to touch on all of these points very briefly, but just in summary, for this Apple electric vehicle, it would bring a further $1 trillion to their overall net valuation, which is currently at $2 trillion, and it's already the most valuable company in the world, so you can imagine what a further $1 trillion would do to the valuation. And another reason is because of their fitness offering with their new disruptive innovation in terms of this industry. So Apple really do have their fingers in a lot of different baskets, which is great to see going forward. And it's also great to see that they're nearly the market leader in the majority of these sectors as well. And it's not just, let's say, the electric vehicles, the fitness industry, your normal electronics for Apple. There's many, many other sectors that they're currently looking into as well. So it's extremely promising, in my opinion, going forward. Second company on today's list is McDonald's, ticker symbol MCD. We currently have just under €700 invested and are up about 5%. McDonald's current share price is sitting at about $220. In terms of McDonald's top shareholders, we have Vanguard Group, BlackRock, and State Street making up the top 3 holders within the company. Now, a lot of people just think of McDonald's, including myself at the time of starting investing, as just a fast food outlet. However, in my opinion, it's a lot more than that. It's also a huge franchise and also real estate stock company, in my opinion. And what I mean by McDonald's being a real estate company as well is we can even see on screen here that they're opening a further 1,300 stores in 2021. Now, even in your own daily life, there's a high chance that there's a McDonald's within a few miles of where you're living. So it is extremely promising to see as a business that they are so kind of diversified across the globe, and you really would find a McDonald's store in the vast majority of built up areas. And again, no matter what time of the day or time of the year or whatever you go to see McDonald's, it's always packed of customers. So it's great to see in terms of a business point of view. And McDonald's really is one of those companies, just like others such as Coca-Cola, that really are long stalwarts in the investment world, and they're only going to go in an upward trajectory over the long term. They also pay quite a nice dividend for a kind of a blue chip style company. They currently pay about $5, or we can see on screen here, $5.16 per share, or just under 2.5%. Finally, for McDonald's, just like the vast majority of companies over the last few weeks, it has dipped a lot in value, so it does pose a great opportunity to either dollar cost average or to buy in at a cheaper position, that if you're a long-term investor, you will really reap the rewards in the long term. The third stock in today's video is another tech stock in the form of Google or Alphabet Class A, ticker symbol GOOGL, and we currently have about €350 invested and are up about 40%. We can see the dotted line here on the 1-year chart is where our average price is, and it's currently trading at about $2,054. In terms of Apple's or Alphabet's top 3 shareholders, we have the Vanguard Group, BlackRock, and FMR, their top 3 holders within the company. Now, just like Apple that we mentioned earlier, they have a vast amount of product offerings, and they really are a market leader, and we're going to discuss what products they offer right now. When doing research on Google or Alphabet, I was actually quite surprised even myself in terms of the vast array of products they offer. Now, I'm sure everyone's aware of their search engine Google, and also even the right app we're using right now, YouTube. But I was very surprised, even if we just look very briefly through the screen. They have the Android, they have Chrome, as I mentioned, Finance, Google Earth, Google Drives, Gmail, like the list goes on and on. We could spend hours even looking through all of these. And that's kind of just the main bulk of them. There definitely is more of their products as well that are kind of subcategories of all of these main sectors. Even though Google or Alphabet is currently trading at over $2,000 a share, the Motley Fool has made a good point of why Google is actually still undervalued, which is crazy to think that a stock over $2,000 is undervalued. However, we can see on the left here that they believe that Google Cloud and even YouTube are 2 huge sources of revenue for Google or Alphabet going forward. So even when you think about YouTube, if you see some of the amounts of capital that some of the bigger YouTube people are actually making, is ridiculous. Like, I remember even a few weeks ago, I was watching a video from Kevin, and he was making thousands upon thousands every day just from AdSense alone. So YouTube is certainly one of the biggest businesses in the world, within my opinion. Final point on Alphabet or Google is, just like Apple, it really is kind of the market leader in terms of all aspects of technology and using the internet. So like for anywhere you look, it's either Apple or Google. If you're online, if you're using a device, majority of the time it is the 2 of those. So going forward, as the tech sector continues to grow and innovation takes place over the next few years, really it's no surprise, and it's a kind of a no-brainer, that Alphabet and also Apple are 2 huge market leaders in terms of innovation going forward. The 4th company on today's list is Tesla, ticker symbol TSLA. It's currently trading at about $707 a share. And if you look on the left here, we can see we're currently down about 1%, and we have €320 invested. As I'm sure you're already aware, Tesla dropped about 20 to 23% over the last 2 or 3 weeks, which had a massive kind of market worry in terms of an overall market crash. However, a lot of people, including myself, got in on the dip, albeit I only got a tiny fraction of a share because they're about $700 a share at the moment, as I said. But the market has kind of crashed about 20 to 23% in Tesla's demise. But however, since then, over the last day or 2, it has come back up in value and has gone back to parity. However, we can still see here that it has a bit more to do in terms of it was up to the over $850 mark. So it's still a fair bit off where it was, let's say, a few weeks or months ago. However, down the line, I believe Tesla, just like the other companies I've already mentioned, are market leaders, and in the electric vehicle sector and even technology, Tesla is definitely one of the market leaders in terms of innovation going forward. However, with that being said as well, although it's already now trading at over $700 and has had a sell-off and correction, I do believe that this stock can be quite volatile in the short term, and in my opinion it could pop again and drop even further, for example down to, let's say, the 650 or even 600 mark. I wouldn't even be surprised if that happened. But over the long term, and when long term I mean 2 to 5 years, which I suppose isn't that long, but over the next 2 to 5 years, I really do feel that in the long term this is going to be a stock that's going to go up and up in value. Probably one of the main reasons why I have such a small position in Tesla is because I got in a lot later than the majority of people investing into the company. So as I said just before this part of the video, that I do believe that Tesla will pop again in both directions. I believe it will go up a lot in value and it will also drop a significant amount as well. So for that very reason, I'm kind of waiting to buy the dip as such and slowly trickle feed funds in. Firstly, to reduce my risk, and second of all, to get a better overall dollar cost average. Again, the top 3 shareholders here on the left are the Vanguard Group, BlackRock, and in third position is Capital World Investors. There has also been rumours of Bill Gates shorting Tesla stock, and it is no surprise that if some of the richest people in the world are doing something, the vast majority of the crowd are going to follow. So that's probably one of the reasons as well why Tesla dropped in value. But again, it was always going to happen. If you looked at the chart over the last year, it nearly went in an upward trajectory completely straight up. Again, that's not manageable at all, so it always has to have a sell-off and a correction. And we can even see here that it has dropped about 23% over the last few weeks. But however, over the last few days, it has come back up at 17% since. And again, there's not really a whole lot to say on Tesla at the moment. I think the majority of investors know a fair bit about Tesla at the moment. Again, just in summary for this stock, going forward in the long term, I really do want to have this stock in my holdings. However, at about $700 a share, and even was up about $850 as well, I am going to be cautious in terms of investing further, and that's why I'm only going to be buying on the dip, because I do feel that this stock has a lot of volatility, as I already said, both in the upward and downward directions over the next few years. So it's kind of patience is key in my opinion in terms of this stock, and you shouldn't kind of get the fear of missing out and just lump all your money into stocks like Tesla that are currently hype stocks. And the fifth stock, or should I say ETF, that I'm going to be holding in the long term and that I'm going to be bullish about in the next few months is the Vanguard S&P 500 ETF, which tracks the top 500 companies within the US. Now at the moment I'm using ticker symbol VUSA or VUSA, and that is on the London Stock Exchange. The main reason for this is because let's say the US currency ones are not on trading 2 and 2 at the moment, and we can also not get the Euro currency Vanguards on trading 2 and 2 either. So that's probably one of the reasons why I might be changing over to the Giro as well to invest further in ETFs, because you can get the Euro equivalent on that. At the moment we have about €656 invested within this ETF, and we're up 18.87%. We can see here again the dotted line is our average price, and it's currently trading at about $54 a share. I should be saying that it's actually in pound sterling. There's too many currencies at play here. For example, my own account is in euro. We're looking at a USD ETF, and we have it in pound sterling is what we're investing in. And sure, I'm all about innovation and kind of looking for the top individual stocks that are going to perform the best over the next few years. However, in my opinion, you need to have one of these style ETFs, such as the S&P 500 as a prime example of a kind of stronghold within your overall portfolio, because that does track the overall market and will offer further diversification. So you can't really go wrong with the S&P 500 that goes up about 8 to 12% on an annual basis. And in terms of diversification for this S&P 500, it has some of the companies we've already mentioned in today's video, such as Apple as their top holding here of 6.6% holdings within their overall ETF. We then have the likes of Microsoft, Amazon, Facebook, and Alphabet class C and A. So they're all kind of tech stocks, so it's heavy tech in terms of this S&P 500. Again, technology, it's no surprise that this is the way forward, and it has huge potential going forward as well. In all honesty, there's nothing really too exciting about the S&P 500, so there's no kind of breaking news, let's say, from the likes of Apple and Tesla that you'd find nearly every minute of the day within news articles. But the S&P 500 is definitely a tried and trusted, safe means of investing, and it's probably as diversified as you can get in terms of tracking the top 500 companies within the US stock market. So that's pretty much it for today's video. I just wanted to very briefly, again because there was 5 stocks, I wanted to very briefly go through what stocks I'm planning on building up a lot over the next few weeks and months, and we had a very brief discussion of my plans for doing so and why, because of catalysts as well going forward for these 5 positions. So there was 4 stocks, there was 2 in tech, 2 in consumer discretionary, and also we had the ETF at the very end there as well. If you found this video anyway helpful or interesting, it'd be much appreciated as always if you're new around here, if you could smash that subscribe button, as we're currently on 1105 subscribers, so thanks very much for all of those. And if you have any questions, comments, queries or suggestions, please don't hesitate to comment below and I'll be sure to get back to you as quick as I can. It would also be interesting to see what top 5 positions you would like to build up on your own portfolio over the next few weeks and months. Thanks very much, enjoy the rest of your Tuesday, and we'll see you all in tomorrow's video.